Saturday morning to you, everybody, and welcome to Mortgage Matters with Rob Weinberg. I'm Gary Byron. Glad to have you on board. Rob, how are you this morning?
Doing well.
I'm good to see you. Good to see you. How was your week?
Excellent. Very busy.
Yeah, it strikes me that that home buying, there's actually a season for home buying, right? Isn't there like an on-season?
Usually there is, and it's not right now. But
No,
this year is an anomaly. We're in the middle still of a pandemic, and housing is important to that.
Yeah, sure. But I would think that are people keeping their money, or they're obviously they're still buying homes, because I have real estate agent friends who tell me this all the time. Gary, our inventory is minimal here in the state of Connecticut. So as much as there's people moving out, there's a different type of person that's moving in,
They're either moving in or they've been here and they've been waiting for this opportunity and they've been saving and now they're ready. So lots of that going on.
Folks, there is a book that I would love to give to you, literally give away to you. It's entitled Mortgage Strategies for the New Millennium, Using Your Home Loan as a Financial Tool. And guess who it's authored by? The very gentleman who I share this studio with right now, Rob Weinberg himself. And really, if you think about it, if you're going to buy a book that pertains to this topic, why not get the foremost expert, particularly right here in the state of Connecticut, who's authored it? I'm going to tell you how to get this book absolutely free, right to your door. You're not paying shipping. You're not paying handling. You're not paying for the book. We'll get into the details a little bit later on in this show, so hang in there. We have a great show for you today, by the way. Let's talk about the do's and don'ts during the mortgage process. How's that?
Very good.
Okay, so let's start off with this. Can I start looking for a home before I'm even pre-approved?
Don't waste your time is my answer to that. That's a big don't. And the reason is because you want to know what you can afford, first and foremost. If you're looking at $400,000 houses and falling in love with them, when you only qualify for a $300,000 house, you're wasting your time and your realtor's time. I mean, it's one thing to peruse online and dream, but it's another to be a serious home buyer. So you really want to get pre-approved as early as possible in the process.
And forgive my naivete. Excuse me. What is the difference between being approved and what's pre-approved?
So a full approval you can't really get done until you're under contract on a property. I think the big distinction that a lot of people need to realize is a pre-qualification versus a pre-approval. So a pre-qualification is you either fill a form out online or talk to a mortgage lender and you give them some basic information on your credit, your income, your expenses, how much money you have for down payment and whatnot. And then they spit out a number to you to say, hey, here's about what you'll qualify for. Maybe they run your credit report. That's a pre-qualification. And really, with the market being so hot, that's worthless. You won't get anywhere with that because what a serious buyer has is a full pre-approval. And what that entails is talking to a lender, giving them that information, having them run a full tri-merge credit report from all three credit bureaus using a mortgage credit score, not a Credit Karma score, not one of those online scores, but a real mortgage credit score. And then the next step is getting your documents. You say you make $80,000 a year, show me your pay stubs, show me your W-2s. You've got a rental property, we want to see your tax returns. I want to see bank statements that show me that you've got the money. It is crazy to me how many people I talk to about home buying every day that say to me, and I say to them, how much do you have to buy a home? And they say, oh, don't worry about it. I'm good. I got money. I'll take care of that. And unfortunately, that's not the way it works. We're not taking you on your word. We are lending you, in most cases, multiple hundreds of thousands of dollars in a very organized way, in a very specific fashion. And there's criteria that have to be met. So once your lender gets all the documents from you, verifies you are who you say you are, you make what you say you make, you have what you say you have available, we can issue a full pre-approval letter, put our signature on it, our stamp of approval, and let the real estate agents that are going to look at that letter know that this person isn't blowing smoke. Yeah. This is real. They have gone through, they've jumped through these hoops. They are fully ready to go and move forward in the process. That's going to put you at the top of the stack when there's multiple offers like there are so much. So that's about as far as we can get until you're under contract. Now, there's certain cases if you have really difficult situation with your income or your credit where I can escalate that to an underwriter and actually have them, not only me, but have somebody even higher up than me give their blessing and say, okay, yeah, they had this credit issue, but we're going to be okay with it. Or they don't have enough money here, but we're okay with them getting it from another place. Or any one of these things that could come up. That's going to then give you that extra layer of protection. So when you're putting an offer in, and the agent knows that you're giving this offer to, that you are qualified and approved for this loan. From there, it's a matter of getting under contract, finishing your negotiation, then we can escalate the loan to the next step, ordering appraisals.
Hey, I'm good for it. Don't worry about it. I'm good for it. Don't you worry one bit. Oh, do they look at like your assets? If you have a savings or like if you've got money involved in like whole life insurance?
Absolutely, yes. Whole life insurance is one of the best places to get money for a down payment. I was on a podcast yesterday talking about this with a financial advisor. And, whole life insurance is an amazing tool. Another topic. I know there's other shows about it, but there's actually a line item on the loan application for cash value life insurance. It's very, not a lot of people have it, but the ones that do understand the value, they understand the flexibility, and borrowing from there is a great place to be able to get down payment money.
Or borrowing against it.
Of course. Right? Yeah, that's what I'm referring to because of those benefits where you don't take the money out and it's growing.
So it's still growing, right?
Exactly.
So what should I be doing? What should I be doing with my credit while I have a mortgage application, let's say, that's still in process?
You don't want to be doing really anything with your credit unless you are told otherwise. And what I'm talking about specifically is don't make any new inquiries. Don't go to the car dealer. Don't get the 10% off at the store at the mall by applying for a credit card. Your credit is going to be under a magnifying glass from the minute you apply for that mortgage until the day that you close on that mortgage. The underwriters, your loan officer, we are monitoring your credit. They are going to typically pull a final credit report or a quality control credit report just a couple days, maybe a week before the closing. And if they see that you've applied for any loans anywhere, including other mortgages, car loans, credit cards, student loans, every single inquiry on your credit is going to be scrutinized. And I've seen cases where it could disqualify you from that mortgage at the last minute. So the best practice is do not do anything with your credit at all when it comes to inquiries. God forbid you take out a new loan. You actually do a new loan, that could absolutely affect you negatively and, again, cause you not to qualify.
So really, up until the closing? Not just don't do anything with your credit between the time that you've applied and the closing?
Ideally, because anything you do is going to be scrutinized. And I'm even talking about maybe when you applied for the mortgage, you owed $100 on your Visa card. But then a week before closing, they do the quality control credit report, and you went from owing $100 to $1,000. All of a sudden, your minimum payment went from $25 a month to $100 a month. That could cause an issue.
But okay, Rob, let's say you had an emergency. You got to buy 4 tires. You're like, geez, I'm out on the side of the road. They're towing me to some garage. I don't have $600 in my pocket, but I got my credit card. I have an emergency right here. I got to get some tires.
That's okay, but you want to communicate. The issue is a lot of people will go through the mortgage process, not say anything, and then I get an underwriter emailing me at the 11th hour that Gary Byron just took out a new loan, and we didn't know about it.
Well, it's on your credit card. It's not really a new loan, is it?
In your case, yeah, you're talking about a credit card.
Okay.
Whether it's a new loan and increased balance, the issue is that you are qualified. We're freezing in time where you're at when you're qualified for the loan.
Okay.
If balance is increased, there's new accounts, there's other things, they could throw off the loan approval. So the best practice is going to be life happens. You may have an emergency. That's okay. But communicate that. Tell your loan officer, hey, I need new tires. I'm putting $800 on my
I'm on the side of the road right now, buddy.
Tell them, because then we can handle it ahead of time and say to you, we can tell you, hey, do you want tires or do you want a new house? And in some cases, that is the decision that has to get made.
So then what happens? I'm stuck on the side of the road with rims?
I had a similar situation happen where a client said to me, My car completely went. Not new tires. I need a brand new car.
I'm not okay. That's a different story.
They had to get a new car, and I had to say, do you want a car or do you want a house?
That I understand. I think we're comparing apples to oranges here because that wholeheartedly, yes, completely. I'm talking about a car. You need 4 new tires. Let's say it's 100